Hi everyone, welcome back to another episode of Trading Kaki's weekly series. There's been a lot of stuff that happened this week, including the Fed interest rate decision, more developments in the banking sector, and I'm sure many of you have watched videos on the TikTok CEO giving its hearing in front of US Congress. So we're here to break all these down for you, including our stock picks for the week, as well as a trade review of last week's stock picks. Given the banking crisis that we've talked extensively about in our last video, some have expected the Fed to pause interest rate hikes. However, it continued its course by raising rates by 25 basis points. It's currently sitting at 4.75 to 5%, which is very near the 5.1% that's projected to reach in the December projection. And it will end 2024 slightly higher at 4.3% compared to the December projections as well, which implies a pause in interest rate hikes or in fact even cuts. The banking crisis continued into the week as we saw Deutsche Bank being dragged as another victim, and earlier in the week we saw UBS swooping in to save Credit Suisse by acquiring them for $3.2 billion USD. Money supply and liquidity are very key to the Fed's interest rate decision. While the Fed did not pause interest rate hikes, it did reverse the downtrend by expanding its balance sheet by nearly $400 billion in just the past 2 weeks. However, as we lean into lessons from the past, we do know that quantitative easing is just a temporary stopgap measure and is definitely not the permanent solution. In just 2 weeks, we saw a total change in expectations for the rate hike cycle. The market currently believes that the rate hike cycle will end in May, and on top of that, it expects a 100 basis points cut in the second half of this year. That's reversing 4 rounds of the current rate hike cycle. These are the key macro events for next week. Towards the end of the week, we'll look at the 3 biggest legs of the economy, with the GDP numbers coming out, initial jobless claims, and the core PCE index, which will tell us where inflation is heading. The SPX is currently still trading within its downward channel. During the week, it did touch the upper bound of its downward channel, however it pulled back afterwards. The following support level would be the 3800 level. Similarly, the Dow Jones also tested the upper bound of its downward channel, but it fell back. The following support levels will be 31.7 and 31. The Nasdaq continued to outperform the other indices this week as it broke out of its downward channel and it closed above its 200-day EMA. The Russell 2000 wiped out its entire year-to-date gains. It closed near the support level of 1725, and if the downward momentum continues, it could retest the last September-October low of 16.5. As the banking crisis tapered to some extent this week, investors would reduce their hedging positions, which is why we saw the VIX or the volatility index falling below its 200-day EMA this week. The dollar index continued to drop and it once touched the 102 level. The rate peak expectations could push the dollar further down and it could retest the low in February soon. With the developments in AI, China's technology sector continued to rebound. However, it is still trading within its downward channel. The banking sector is not completely out of the woods, and we see more investors crowding in with the demand for US treasuries, especially as the market is pricing in recession and the ensuing rate cuts in the second half of this year. Cryptocurrencies consolidated this week. This is mainly because we saw Coinbase, which is the US biggest cryptocurrency exchange, being hit with allegations of violations of securities laws by the SEC. Bitcoin closed at last June's level and Ethereum closed at last August level, with the support levels at 30,000 and 2,000 respectively. The biggest winners for the week would be communications, energy and materials, and the biggest losers for the week would be utilities and real estate, with the banking sector still not completely out of the woods as we earlier mentioned. Printwater reported its fourth quarter 2022 results. As you recall, the reopening in China also happened during this quarter. So while its revenue did show tremendous growth, it was bogged down by strong peer competition and weak consumer sentiment. Meanwhile, its international platform Temu will be seen as a new growth driver as it expands into new markets and regions. Nike beat estimates on both its revenue and earnings. On top of that, the management has raised its FY 2023 guidance for revenue to grow in the high single digits. Going forward, its margins may be pressured by a stronger US dollar, higher freight costs, and excess inventory. Key earnings to look out for next week would be Futu, Lululemon, and Micron, which all report on the same day. Our stock picks for the following week would be Meta and Agnico Eagle Mines. At this point, we've all seen videos of the TikTok CEO being grilled by the US Congress. We can see that many of them were not convinced that TikTok will not pose a threat to the US security. With a potential ban of TikTok in the US, Meta's Reels is seen as a direct alternative to TikTok. This is also where we'll see most of the advertising budgets being shifted to, which is one of the biggest contributors to Meta. The nature of tech companies is more growth-oriented and is thus more sensitive to interest rate trends. With the upcoming cuts, this would boost the recovery of tech companies, including Meta, which is directing its efforts towards AI and social media. Our recommended entry for Meta would be at $200 with a target price of $225 and a stop loss price of $190. Our next pick is Agnico Eagle Mines, which is a Canadian-based gold producer. The credibility of central banks have been in question in this banking crisis. With that, investors are looking to alternative assets including gold. Moreover, the upcoming rate cut expectations will be good for gold's rally and will help it reach new heights, with its inverse relationship with the falling dollar index. Our recommended entry will be at $51 with a target price of $58 and a stop loss price set at $48. Last week, we recommended Microsoft and Barrick Gold. Microsoft hit our recommended entry of $270 and the P&L as of Friday is at 3.9%. As for Barrick Gold, it hit our recommended entry of $17.50 and the P&L as of Friday is at 5.8%. That's all we have for this week. Do remember to like, subscribe, and we'll be interested to see if you did get into any of our stock picks.